Here are the 7 reasons why home prices have not crashed and will not. Reason number 1, baby boomers, because the mass retirement is coming and it's coming soon. One thing that you should know, a lot of baby boomers have small businesses. Those small businesses are family or single adult operated. If their kids don't want to continue with that business, the doors are going to close. Side conversation about buying those businesses, but we're talking about real estate. Baby boomers are retiring and they are moving to states where their income goes further. Florida, Texas, Tennessee, states that are forgiving towards income tax and the way that assets are treated. So Connecticut, as beautiful and as lush as it might be, doesn't really offer retirees or aging adults any value. Reason 2, there is a very scarce number of homes for sale in the market. I'm saying this for the millionth time in a row, but for some reason it's not landing. There are no houses for sale, meaning people are not moving, not because they can't move, but because they choose not to move. And because of this, home prices are going to stay up. I think we're at number 3 at this point, interest rates, right? When the bubble was not really bubbling in COVID years, there was the Fed reaction and they were like, oh, let's just like change interest rates down to 0. Well, it was 2%, but like for all intents and purposes, money was free. So people were like, let's buy houses, throwing giant dollar signs at these houses. So when they elevated pricing, because interest rates were low, the pricing stays and they are locked in for 30 years with like 2% mortgages. Fast forward, we are in 2024 and home prices have not gone down, interest rates have gone up. And so because of that, it keeps people, like I said before, number 2, where they are, because why would you move and trade up a new house for a more expensive mortgage where your money is more expensive? Reason number 4, my favorite reason, they're not building any houses. And if they are building houses, they're not building them at the frequency that they need to be built to accommodate the number of people that want them. So supply, demand, and there's an underbuilding gap. So that's been happening since early 2002. So we're talking about like 22 years of not keeping up with the need for new construction. So if that's true, then the value of an existing home is going to remain high. Nevertheless, if you are thinking about building a new home, your value is going to stay even stronger because it's going to be the newest home on the market when you sell it in 10 years. Side note again, if you are thinking of building or buying, please think long term. Life happens, you have to move unexpectedly, but if you're thinking of buying, make sure you're gonna be wherever you're gonna be for like 10 years because you're almost guaranteed to be solvent and make money if you're in that house for at least 10 years. Reason number 5. If you are looking at the world like a buyer's and a seller's market, we are in a very, very strong seller's market. What is a buyer's market? It is when there is at least 6 months of inventory available for sale. We haven't seen that exist since it's been 20 years, like maybe 15, but more like 20 during the Great Recession, when nobody had jobs and there was a massive foreclosure overhaul. That is not going to happen because so many people have equity in their home. So at this point, we're going to see the continuation of a seller's market because the seller's market means that there's fewer than 2 months worth of inventory on the market. Right now, if you look at a smaller town in Connecticut, for example, East Hampton, there are 7 houses on the market. That is not even close to a month of inventory. Reason number 6, real estate is hyperlocal. So the good news is the East Coast is flourishing. We are seeing double-digit value increases year over year, whereas the West Coast, California, has been declining. Their values are declining, the demand's declining for a number of reasons. And I think the reality is, because real estate is so hyper local, you have to pay attention to what's happening in your market and not nationally. Nationally, there's been a slight reduction in values, but in Connecticut, we've seen year-over-year value increases since 2020, over 50% value increases. So that is substantial. Finally, number 7. So the final thing that I want to leave you with is that inflation actually helps in real estate. Well, it doesn't help. It just reinforces the value. So inflation is when a dollar isn't necessarily worth a dollar anymore. So your dollar doesn't stretch as far. In real estate, your house value is directly correlated to the value of money. When the value of money doesn't stretch as far for commodities like food and gas and so forth, your house becomes more valuable. So it hedges against inflation. When inflation reached its all-time high in 2023, home prices appreciated. And so that should tell you, if you invest in real estate, it is a safe investment, because inflation doesn't affect it nearly as much as it affects other asset classes. So this is 7 reasons why the housing market is not crashing. Ask me all your questions in the comments below.